Hey there, YouTube family. Welcome to the Stocks with Josh show. Today's message is an important warning about crypto companies and exchanges that are in decline. I want to remind everybody that months ago, I came out with an urgent warning. I did 2 videos back to back warning everybody to get their money off of BlockFi and Voyager. Before those companies failed, I had people asking me in the comment section, is this company safe? And I said, no, get your money off immediately. Some people listened, some people didn't. I'll be honest, I'm a little bit surprised at some of the folks that kept their money on BlockFi despite being warned. And in addition to that, I called out Sam Bankman-Fried on this channel months ago. I told everybody that I thought that he was a creepy dude. I felt it was weird how the media seemed to be wanting to prop him up and that he seemed too much, you could say, in bed with politicians, and it didn't seem to align itself with the movement of crypto. I did not foresee that FTX was the mess that it was. It was very hard to imagine how unscrupulous he and all of his cohorts were. He surrounded himself with famous people and politicians to hide his malicious intents. But the bottom line, that's an unwinding story. It's a mess. But more importantly, how can we look at some of these companies, stocks, and these exchanges more carefully? I'm going to be looking at a couple of them that I think you guys need to be aware of. I have done a previous video about a couple of these and warned people, and people didn't agree with me, didn't listen, and continued on in the very same way that folks continued on with BlockFi and Voyager after they were warned. So I want you guys to both pay attention to the warning today, as well as the logic and the reason that I'm giving for why these are concerns to me, because I think it could help you in all of your trading, both now and in years to come. I'm going to touch a little bit on Tesla and Apple and apply the exact same logic that I'm going to apply to the companies I'm going to discuss today with them, so that you could get some insight and some perspective on what to expect in those type of trades as well. I think this is going to help a lot of you guys. Hit the like for me, check in the comments and say hi, and let's get into this. Okay, we're going to start off with Coinbase Global Coin, COIN. When these guys came out, it was very exciting. A lot of people wanted to get into the crypto space, but they wanted to do it indirectly with a company that traded crypto, not necessarily buying the crypto. And so a lot of institutional money piled into Coinbase, but altogether it's come down 87% from its all-time highs. And so this has not been a profitable trade for most people. And I did a video on October 19th. It was called Warning These Crypto Giants in Decline. And on that day, Coinbase was $63.19. Well, today, November 18th, the price is $45.45. That is a terrible decline of 32% in just the last month, when the markets have largely been going up and rallying. That is a very bad sign. When the markets are going up and other stocks are making new lows early, that typically signals that the next time the markets go down, they're going to go down faster and harder, and the volume increasing and selling is going to accelerate. I warned about Coinbase, and I'm warning about it again. In particular, it broke its June lows, which a lot of companies have not even gotten back to their June lows, but it broke its June lows. And what that means is that it's in a downward price exploration move. We don't even have defined support beneath it. It's basically going down, and it's going to be looking for a place to bounce or to drop to. And in addition, we've got Mara Digital Holdings, Mara, M-A-R-A. This was a really great stock to be in a couple years ago before Bitcoin had its big run up. I owned thousands of shares at the $2.50 range before it ran up to $80. But it's down 92%, all the way down to its June lows of $7.50. And on October 19th, I warned when it was at $11.07 that you should be taking profits and getting out, because today it's down at $7.50. That is a 35% drop since my video. And even worse than that, I see more decline ahead. I see the next support level beneath at $5.36, and it's going to bounce along the way, but each time it's losing more and more momentum upwards until eventually we go down to $5.36 and then to $3.50. And then ultimately, I think it's actually possible for this to get below $2.50. And I would be reluctant to accumulate it unless I saw it at 88 cents. And I was convinced that the management was not going to go bankrupt. These guys are facing a lot of headwinds. I'm going to explain why here shortly. But again, this was another one of the crypto company giants that were falling from the skies and need to be avoided. And there was a bonus mention that day of RIOT blockchain, ticker RIOT. These guys have shown better relative strength than Mara, but they're still in the same boat going down the same river. On October 19th, the price was $5.67. And there's been a 21% drop since, with today the price at $4.50. Now, June's low was $4.19, which means it's slightly above its June low. But ultimately, I believe it's going to find stronger support at $2.50. There's a very simple explanation for why these companies are going down. We are still getting a bottom for Bitcoin. And then once we get a bottom for Bitcoin, I've done some other videos in the past which say that we will be between an 8, 9, or 10-month period in which we're going to move sideways. We're not going to be advancing. That's the critical problem with both of these companies, that stocks go up when the story is increasing profits. You cannot go up in price on a stock when the story is that the prices are going to be declining from quarter to quarter ahead of you. The price will bleed off, and that's what we're seeing in these companies. In addition to that, if that wasn't even the worst part, specifically in regards to the miners, right now it's costing $19,000 to mine Bitcoin, and the price of Bitcoin's at $16,000. So these guys, Mara and RIOT, they're miners, and they're going to be under enormous pressure, even the pressure of bankruptcy. That's if they've not managed their money well. Now, I'm not saying that these guys haven't managed their money well. I'm not saying that they're going bankrupt. I'm just telling you that they're not in an ideal, profitable environment. And because they're not in that environment, the stock will not accelerate in value, but instead will decline. So we hope that they survive, but they will not run up until Bitcoin ramps up. All right, let me take a quick station break for my moomoo affiliate link. This is an exchange. It's free to trade. They're currently offering 15 stock with a lower investment threshold than they have before. It's a limited time offer. Plus, if you open and fund the account, you can get entered into a $60,000 sweepstake. This is a holiday offer. These guys have the cheapest margin account available in the retail market with 6.8%. Compare that to Robinhood's 10.5%. They've got the free level 2 data. They've got the 16-hour trade window. There's a stock screener that I use there every day to find stocks to trade. You can trade options, you can short stocks, plus you can get onto the Stocks with Josh page and join the Stock Josh family chat group. They're a U.S. licensed and registered exchange. Your stocks and your cash are insured, up to $500,000 on stocks and $250,000 on cash. Click the link, get the cash. Hopefully you'll win the big prize. Join the chat group. I hope to see you guys over there. Let's break down some of the important points. Pops along the way. When I did that video, I told everybody that we were in an upward trend and that it was likely that we might get a little pop. Both of those popped a little bit after I made that video, but then continued on a strong downward decline. I've done some videos purely to help people with some of the stocks they've been in. I'm not in AMC. I'm not in NEO. I talked about those companies. I said, NEO, you might get the opportunity to sell between $12 or $13. I talked about AMC. You might get the opportunity to sell between $8 and $9. And that's when people begin to get slightly back to a place where they're whole, but then they're just too afraid to let something go. We're not in an upward trend on these companies. We're in a downward trend. And so if you're a long-term investor, then you go ahead and you stay your course. But if you're trying to keep your accounts from bleeding, if you've got a hole in your bucket, doesn't matter how much cash you keep piling in, it just keeps draining. If that's the way you feel right now about your trades, well, then you've got to take advantage of these pops to sell some of them. Now, I want to break this down. This is the second most important point. book value versus market value of a company. And I think this is where a lot of new investors get confused. They look at a stock that's trading at $100 value and they hear about how successful the company is doing and how well their products are selling. And they think in their mind that in some way the price of the stock correlates to the worth, the actual worth or value of the company. It does not. There's a massive difference between what's called book value and market value. Book value encompasses things like cash on hand and assets and patents and everything that the company owns that if they were forced to sell, they could turn around and sell. Now, that's book value. Market value tends to include things like growth, momentum, opportunity ahead, what they will do with the cash that they're making from the stock that they're selling or different things that are going on, and what they're going to do with it to become even more successful. But ultimately, the market value is a reflection of what people are willing to pay for it on that day at that given hour. So let's talk a little bit about Coinbase's book value. Their book value right now is $24.83, which means that their market value is trading at a premium, which is currently at $45.45. The difference is the perceived value, not the actual value of cash on hand or assets. The perception can change overnight, and we saw that in FTX, where the value was very elusive, and at the end of the day, there was no value there. Startups, growth, crypto, these have a very, very unclear and foggy book value and perception of value with very high inflated market value, things that people are willing to pay for who really don't understand the underlying asset. All right, let's touch on exchanges. One of the number one questions I'm going to get, because I'm telling everybody that the Coinbase stock is in decline, is people are going to ask me, is it safe for me to hold crypto on Coinbase? I'm going to tell you that my position is that it is safe. These guys are a publicly traded company. Just because their stock value is going to go down doesn't mean that there is any problem with the company. The books are open. You're able to see what they've got on their books. They're able to see all the crypto, all the cash on hand, the customers' deposits are all visible. I have absolutely no reason to doubt them. I personally use them. I do take my crypto off, but I do leave some crypto on there sitting, and it doesn't worry or concern me. But I've warned you guys in the past that there are companies that are not publicly traded. They're not reviewed. We saw BlockFi, Voyager imploding, obviously FTX. But I've warned about crypto.com. I've been told that it was FUD for me to be concerned about them. One of my principal reasons for being concerned about crypto.com is just a judgment issue, not any different than when I had issues with Sam Bankman-Fried. I didn't like the fact that crypto invested so heavily in a stadium naming deal. That really shows a lack of judgment, a desire to blow up in growth without using just strong financial discipline and the pursuit of growing organically over time. So I'm worried about them for that reason. Genesis is another one. Huobi is one. Gate.io is another one. These are concerning exchanges. Be careful. If you've got sizable money, and I'll be honest with you, if you've got any money at all and you're on any of those exchanges I mentioned, I would take it off. Get yourself a MetaMask hot wallet at bare minimum or a Ledger cold wallet. Don't believe the FUD that you hear. There are some best practices to using those, but if you're going to be in the crypto space and if you're going to hold on to your crypto and not fear losing it, you probably need to take the time to learn how to use the wallets so that you can function in that space in the next bull run. Use this winter as an opportunity to learn and become stronger in these investments. Opening up those wallets and having those types of systems will enable you to go after other cryptos that are not on Coinbase that you're going to want to invest in the coming days, and you're going to want to go get them oftentimes on these obscure exchanges, maybe these unsafe exchanges, but you want to get them, take them off, put them on your safe wallet. That's the game plan there. What this video is principally about is understanding stock cycles. I've talked about this probably 20, 30 times on the page. Accumulation, markup, distribution, decline. That has nothing to do with the value of the company. I'm going to use Apple stock today as another example. Today, you can buy Apple for $150, but a lot of you would be shocked to find out that Apple's book value is $3.18. Yes, their actual cash value, book value of their company compared to their market value of the stock is only $3.50, which means that if you have all your money piled into Apple right now and the CEO or the company makes a major misstep, that stock has a lot of room to fall. You're not trading actual value, cash-in value. You're trading people's perception of the value and perception of the management team and perception of the products, and that can change from day to day. Some people will be like, Josh, you're making me feel like I shouldn't invest in stocks. No, I only want you to understand this. When a company is not in a markup phase and when its price is not readily advancing, at that point, it is declining. And you need to know when you should buy, when you should accumulate, when you should get back in. And don't be surprised if some of your favorite companies just seem to drop in value out of nowhere, going from 70 to 60 to 50 to 40 to 30 to 10. And you're thinking, when will the bleeding ever stop? Isn't this a super valuable company? The answer is no. Its book value might be shockingly low. And then Tesla, okay, on March 22nd, 2022, on a Technical Tuesday video over on Larry Jones's page, Stock Up with Larry Jones, I said that Tesla was a sell, that it was in decline. On that day, it was $333 a share. And since then, we've had a 45% decline. Now, I want everybody to know that tons of people laughed at me in the comments. They said, oh, love you, Josh. Love your technicals. You're wrong about Tesla. I'm buying the dip. Well, almost 50% later down, that wasn't the right call. I'm just going to tell you guys that we're in a range on Tesla. Call this a freebie. We have the opportunity to retest upwards to 213. But the downward range from there is down to 135. And I would encourage you not to laugh at that because I may be doing another video in the future when Tesla gets there. But Tesla's got an enormous amount of headwind ahead of it. It's got to overcome a lot of competition. It's got to overcome distraction from the CEO. There's a lot of things going on there which could cause the stock to get punished. And remember, we're not dealing with book value here, okay? We're dealing with perceived market value. In my opinion, there are stocks and crypto right now that are 80 to 90% off of their highs, and they're a perfect time to accumulate. And then there's the bottom line that the last 3 months have been a wildly profitable time in the markets. You've heard it probably from Larry's page. I know they're friends of mine. Keenan also has been making a killing. The fact is that Wall Street, I've said it before, is a magic money-making printing machine. And if you learn how to invest and if you do your homework, you can make money all the time in the markets. But these types of videos that I'm doing for you guys, I'm trying to help you guys understand. If you liked it, if you learned something, if it gave you a better perspective, hit the like, the subscribe, and the notification bell. As always, peace and blessings, my friends. We'll talk to you soon.